rates are not high. 5% historically is low. I mean, if you go back to the era where we've been on fiat money, go back to 1971, and where have the Fed funds rates been? 5 is not high. It's only high in relation to where we've been for the last 14 years or so, in this unprecedented period of monetary excess. But we now have the highest inflation since the 1970s. Yet interest rates are nowhere near where they were back then. So they've got a long way to go up. But of course, the Fed can't let them go up, which means inflation is what's going to go way up. That's why I'm so bullish on gold, because I'm very bearish on the dollar.
Peter Schiff, a renowned advocate of gold, has gained recognition as someone who has consistently foretold the downfall of the dollar over the course of several years. According to his perspective, the monetary policies implemented by the Federal Reserve are driving inflation and devaluing the dollar, ultimately favoring a rise in gold prices. Peter strongly advises against buying into the hype surrounding the Federal Reserve's seemingly hawkish pause on interest rates. He asserts that if the Fed genuinely held a hawkish stance, they would not have skipped the rate hike. In Peter's opinion, there is a high possibility that the Fed's next step regarding rates will be a reduction, not due to lower inflation, but rather due to a potential downturn in the labor market. In his tweet, he said, "Don't believe the hype on the Fed's hawkish pause on rates. If the Fed really was hawkish, it wouldn't have skipped this rate hike. There's a good chance that the Fed's next move on rates will be a cut, not because inflation is lower, but because the labor market finally cracks." According to Peter, the current monetary system heavily relies on the US dollar, but the issue lies in the fact that since 1971, the US dollar has been detached from any tangible backing. Peter is convinced that once the markets grasp the fact that the Fed will not emerge victorious in its battle against inflation, they will concede defeat. In this scenario, inflation will triumph, causing gold prices to skyrocket. Take a look at some highlights from the discussion that we'd like to share with you. But before we continue, be sure to subscribe to the channel and activate notifications for future updates.
I mean, you really have a perfect storm right now of destruction for the dollar, because the Fed tightening cycle is coming to an end. And so that's been the tailwind for the dollar. It's now going to be a headwind. I mean, it's going to be weakening the dollar. But you also have this unprecedented movement now around the world to de-dollarize. Countries that were significant buyers of dollars and then U.S. Treasuries are now sellers. China obviously doesn't want our dollars, and it doesn't want to buy new dollars. It wants to get rid of dollars it owns. Same thing, clearly Russia, is not a dollar buyer anymore. Saudi Arabia doesn't appear to want dollars anymore. Brazil, India, you got major exporting countries that have huge dollar surpluses in their trade and large dollar reserves in their holdings that want to unload. So this is going to put tremendous pressure on the dollar at a time where our budget deficits and our trade deficits are in record territory. We've got $1 trillion a year trade deficits, $2 trillion a year budget deficits. There's no place for those $3 trillion to go. And so this is massive inflation because, for years and years, America exported its inflation. We printed money and sent it out to places like China. They used the money to buy treasuries, which kept our rates low. And then they shipped us goods that they produced, which kept consumer prices low. Right. Now we're going to import that inflation back because now the Chinese aren't going to want to buy these dollars. And so therefore Chinese goods are going to be more expensive. We're not going to buy as much stuff. So our prices are going to go up once the price of gold really starts to go up. I mean, maybe right now they feel they can go slower and, they're taking advantage of the fact that the price has been relatively stable. It is a bit surprising that it hasn't already moved up given what's going on. I think that's causing some people to kind of doubt that it's ever going to move up because they'll say, well, if it can't move up given the circumstances, it'll never move up. Well, that's just not true. It's just taking time. Remember, I think the big headwind that gold has faced, one was the strong dollar, and the dollar is, surrendering that strength now. It hasn't broken down yet. I believe it soon will. It's having a very weak day today. But also, the markets still believe the Fed. they still believe Powell when he says he's committed to doing whatever it takes to bring inflation down to 2%, no matter how high rates have to go, no matter how long they have to stay there. And that has been a headwind for gold. But what's optimistic is that even with the expectation of, this higher for longer, gold has not gone down. It hasn't gone up. Yeah. It hasn't sold off either. It's kind of holding its own. But I think eventually the markets are going to realize that this is all bluff, that Powell really doesn't have the cojones to fight inflation when that fight causes severe collateral damage to the economy, to the banking system. I mean, in his Q&A yesterday, he said that he's never going to tell Congress to stop spending or stop the deficits. He said that's none of his business. Fiscal policy isn't any of his concern. Well, that means he's going to have to monetize all those deficits that he refuses to criticize, which are skyrocketing. Yeah. There's going to be tremendous pressure on the Fed to create inflation, not to fight inflation. And so when the markets realize that the Fed is not going to be victorious in this fight against inflation, it's going to surrender, inflation is going to win, gold is going to go ballistic, so I just, feel that, I'm willing to wait it out because I know how much it's going to go up when it finally moves. And I'd rather own it now and wait than have to scramble to buy it later at a much higher price.
Schiff acknowledges that Bitcoin is not synonymous with blockchain technology and asserts that Bitcoin is not a viable solution. In his view, the true answer lies in blockchain, which is supported by gold. He said, with the advent of the internet and blockchain technology, gold's functionality has significantly improved as both a medium of exchange and a unit of account, he elaborated. The enduring role of gold as a reliable store of value remains unchanged. According to Peter, in the event of a substantial surge in gold prices, with gold surpassing $2,000, possibly reaching $2,100 or $2,200, it will signify a significant upward trend. However, Bitcoin, on the other hand, is expected to continue declining. If Bitcoin severs its correlation with the technology sector, it will also lose its correlation with gold.
I think what's interesting here for you and your Bitcoin is Bitcoin has not participated in this explosion in tech. I mean, for a long time, Bitcoin was very highly correlated with the NASDAQ and these type of stocks. But you've seen this big move up in tech, and Bitcoin has actually gone down. I mean, Bitcoin, as we're speaking, is right around 25,000, actually a little bit below the 25,000 handle. So it is ignoring all the speculative money that's flowing into tech. It's not flowing into Bitcoin. Now, some people might think, oh, okay, well, it's correlated with gold now. Well, I mean, it's like people like to say it's correlated with whatever happens to be going up. But gold's been going sideways, and so is Bitcoin, although Bitcoin's actually gone down, not just sideways. Gold's really gone sideways. But I think it'll be interesting to see what happens if we do get a big breakout in gold. Gold takes out 2,000, maybe 2,100, 2,200, and really starts to go. Yet Bitcoin continues to fall. And so if Bitcoin breaks its correlation with tech, and then it has no correlation with gold, then what the hell is it? Why do people own it, right? So this is going to be, I think, a big moment here for Bitcoin, And so at least
I would agree.
Take Bitcoin and buy some gold, at least you could use it to buy one of my ordinals. I don't think Bitcoin's going to succeed, but if I'm wrong,
then you're
these
hedging your
things
bet.
could be really valuable because I think that I'm going to go down in history. I'm a very historic figure in the evolution of Bitcoin if it succeeds. I mean, because in the Bitcoin community, I am the number one Bitcoin player.
Yeah, no doubt. You're the Bitcoin bear for sure.
So I think it has some value. Now, even if I'm right and it crashes, well, hey, this is the guy that got it right. Hey, it could have value for that reason too. At a minimum, the prince will have value.
Although Bitcoin recently experienced a decline to a 3-month low, it still maintains its status as a store of value. Since reaching its low point in March 2020, Bitcoin has outperformed gold by an impressive 430%. While gold tends to exhibit slow and steady growth, Bitcoin is known for its more volatile nature, resembling a roller coaster ride. Nevertheless, both Bitcoin and gold serve as excellent safe havens in comparison to the depreciating US dollar. Do you agree with Peter's bullish outlook for gold? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. We appreciate your input and look forward to hearing from you again soon.